Good afternoon, options traders, and happy Monday, everyone. And this video is a little bit of a follow-on to the one that I posted last week called How Much Faster Do Short-Term Options Decay? And so anytime you're talking about the rates of decay, time decay, anything like that, it's always about managing time decay. At least that's what it's about in most traders' minds. And so I thought this was an important topic because I hear this from a lot of traders, especially the new ones. I want to learn how to manage my time decay. And they feel that they have to do this because they think that time decay is a risk. Well, let's take a closer look at time decay and see if there's any managing that needs to be done, and if so, how you should go about doing it. So first of all, understand that time decay is really a characteristic of an option. It is not a risk. Why? Because risk is associated with uncertainty. So as I talked about in that previous video, is the coin going to come up heads or tails? Will the stock's price rise or fall next week? Those are all things that we don't know. That's uncertainty. But the passage of time is not uncertain. We know that if you have a 30 days to expiration option today, tomorrow it has 29 days to expiration. There's no surprises. In fact, the passage of time and the rate of this passage is probably the only thing in the market that's 100% known. So it's really unfair to call it a risk when it is a true certainty. So that's the first thing. When traders see this as a risk, it sets up for all kinds of really mismanagement issues. So here's a classic case. Let's say that here's today and 30 days forward. And you think that some type of event is going to happen in this window. Maybe it's a buyout, merger, acquisition, just the stock's price is really going to take a big run during this window. Okay, so hold that thought. Now let me ask you another question. Do you think it's more likely to happen in the first half of this option's life or in the second half of this option's life? Well, if you think about it, you should say, I really don't know. It's just sometime during this 30-day window. But then what do traders do? They get to some point in time, let's say at the halfway point, and they say, well, you know, the stock hasn't really performed like I thought. It's not really moving yet, so let me close it so I can manage this time decay. Well, what did you do? You just shut yourself out of the very premise that you got into the trade to begin with. You thought something was going to happen in the first 30 days, and now you're forcing yourself to get out after 15. If you were that confident it was going to happen in 15 days, you should have bought the 15-day option. But then traders would be shutting it down after 7. So you can always get caught in that loop. At some point you have to say, I need a window of time, and how much is that window going to cost me? So in this example, let's say it's $3. Well, the very second you place that trade, it's going to be a $3 cost. That's never going to change. It's a sunk cost. You know that cost is going to zero at expiration. So none of that is uncertain. Those are all decisions that should be made up front, not at the halfway point of the option's life. So in this example, let's say if $3 was going to be an issue, what could you do to manage it? We'll go back to the way that options decay, which is what I talked about in the previous video. If a 30-day option costs $3, yes, you're going to use 100% of that time, and the cost is going to be $3. But if you double it, if you go to a 60-day option, but only hold it for 30 days, you're using 50% of the option's life. It's going to cost you about $1.24, a little less than half. If you buy a 90-day option, it's going to cost you about $5.20, but if you hold it for 30 days, you're only using 1/3 of the option's life, and it's going to cost you 95 cents. So you can see that the cost starts coming down fairly rapidly, but then look what happens. You hit a point of diminishing returns. Once you get past about 210 days, it doesn't really drop off all that quickly. Even down here, look, you're going 49, 46, 44, 42, even though you're still adding 30 days to the clock. Not a big change in the cost. So another point to take from this is that if the time decay is going to be an issue, go out 2 or 3 units in time. And by units, I mean the first option we were looking at is 30 days. 2 units out would be 60, 3 would be 90, and so on. If this were a 7-day option, 2 units out would be a 14-day, 21 day, 28 day, and so on. You're going to get exactly the same type of graph. So look at how quickly it falls off and then it starts to level off. So if we graph just this final column right here, this is what it looks like. So again, big rapid fall off in the first few units, going from a 30 days to expiration to maybe 120 days. That cost has fallen off rapidly from $3 to about 75 cents. And then it starts to level off. Doesn't really get a whole lot cheaper to go out much further in time. So if you are concerned about the cost of the time, and you should be, that's fine, but it needs to be addressed at the time that you place the trade, not when you're halfway through it. Another thing that people do, they get halfway through the option's life and they say, oh, well, let me start doing diagonal spreads so I can try to offset some of this time decay and start managing it. Well, now you've gone from unlimited upside to limited upside. Well, now you're talking about two different strategies. Did your strategy outlook really flip? Or is it just fear that's causing you to change your strategy? This is why people get into trouble, and this is why I always tell traders, manage your time decay up front. So remember, manage time decay from the beginning of the trade. Don't place a trade and hope that the news occurs sooner to reduce your cost, and don't alter the strategy outlook hoping that that's going to manage your time decay. Always remember that time decay isn't a risk of an option, it is a characteristic, and if you keep that message straight, you won't make the mistake of trying to manage time decay in the middle of the trade. For anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and Strategy Lab at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.